Welcome back. You're watching NSE FinWiz Season 2.
The solution that you gave are for long-term plannings. What are the best instrument in market, being novice, all of us, that you suggest for our short-term plannings, like buying home or car or some short-term goals?
When you say short-term, how do you define that short-term period?
2 years down the line, buying home 2 years down the line.
Okay, fantastic. Your fund like MIP or a simple bond fund works very well. Okay. Now, MIP, what is MIP? Monthly income plan is said, but don't go by the month name. It's a combination of 25% equity approximately and 75% bond fund, fixed income product. It's like a FD. So that particular put together, the probability of making 100% money comes rather than 2 years period, 2 years and above. Now, given the tax structure, if you invest for a period of 3 years, in all probability, you will be making about 9 and 10% return. And if you invest for a period of 3 years, that 10% becomes tax-free investment for you. Okay? MIP works best if you are a conservative investor. But if you are little aggressive and you want to take a bigger bet, there is something called balance fund, which invests approximately 65% in equity and 35% in same bond fund. That also works for 3 year and above investments. That could give you anywhere in the vicinity about 10 to 12% post-tax return.
My question is, we have always heard, don't put all your eggs in one basket. So I want to know, what is the ideal combination of opportunities where you can invest? Say, for example, you have a fixed deposit, you have real estate, you have a life insurance policy, you have mutual funds, as I am hearing now. So what is the ideal combination and mix of portfolio that one should have?
Okay. Yeah, that's what most people have this question that, if I have 30,000 to save, so this 30,000, where do I invest?
First, let us see the big no. No to bank FDR. Not required. Don't take it bank FDR. Similarly, no to Kisan Vikas Patra, because looking to your profile, these two investments are no good at all. Instead of that, better invest in PPF, Public Provident Fund, where you get very good yield, tax-free, interest is completely tax-free, no one in the world can attach that money, and lastly, the big thing is, on that you get a deduction under section 80C. That is a great big advantage, and when the money comes back to you, that day, no income tax on that. So this should be your number one priority. And please segregate real estate and other investments, because real estate is not that easy for me that every year I can plan one property. I have to plan one property right now today and plan for 15, 20 years when my flat or house will be ready. So if you are talking of real estate investment, my suggestion and idea to you will be 100% guarantee I want that my purchase price is lower than those 500 people who are buying the flat in that area. What should I do? I should hold a meeting here of all the colleagues in your office, sit down, think of the best investment which you all feel agree and unanimous that this flat or this apartment is very good one, and then form a UTI group. What is this? Not Unit Trust of India. This is my UTI. Unite to invest. I want all of you to unite. 10, 50, 100 of us, we unite together that yes, we all want to buy the flat, and then we send one of our friends, please go and have the bargain. And then I tell you, you will get 10 to 15% cheaper than what is available in the market.
Also, another thing that they're confused about is whether it should be short-term, investments should be short-term, how much should be short-term, long-term, and how much should they play safe and risky. So how is that?
I think today you can all afford, even if there is little bit loss, does not matter. I will be not on the footpath because my fixed salary income is in any case there. But still, not every investment we should make in the stock market. We should make something in the item which is dear to about 20% participants. Gold, yes, I know you want gold. But when you think of making investment in the gold, I would recommend invest in gold, but not directly buying 10 gram, 20 gram, 50 gram, 100 gram piece of gold, or buying jewelry every month, every fortnightly or something of that type. No. Why? Because if you buy the jewelry in total end of the 31st March, if your jewelry value is more than 30 lakhs, you have to pay one more extra tax known as wealth tax. So avoid purchasing jewelry. Also, no need to buy the gold in the raw form. That is also liable to wealth tax. But please buy the gold. You want to buy gold, you will not stop, I know, but don't worry. Buy gold in the paper form. Gold mutual fund. No wealth tax liability, nothing to worry about theft, etc. And very good one. A small little amount you can buy. I think now is a good time to make a small little investment in buying the gold through mutual fund.
We'll take a short break. NSE FinWiz Season 2 will be right back.